Hi everyone, this is my first video and I hope I can add value to you through this video. What if I told you that you can start building a wealth with a little as 200 or 100 per month and you need not to pick any single stock by yourselves? That's a promise of mutual fund and one of the most underrated financial tool we have. So I'm Neeraj Yadav and in this video I'm going to walk you through everything that you need to know to start investing in mutual fund, from what they actually are, how to choose the right one, and to placing our first investment today. Hopefully, so let's get started. So in this video, we're going to learn about what is mutual fund, which type of fund you should select for your goal, depending on your goal, like whether long term, short term, or like what time you want to be invested in the market, how to start the SIP, and the some common mistake that investors do while selecting the mutual fund. So we'll go through it in detail. Yeah. What exactly a mutual fund? Think of it like group of friends renting apartment together, and if one person rent it alone, the cost would be much higher. But by sharing the rent, everyone get the benefit at a lower individual cost. Similarly, in a mutual fund, thousands of investors pull their money together. A professional fund manager then invests that combined money across a different basket like stock, bond, and gold, and mix of this. And this how is this going to be decided is going to be decided on the basis of the fund objective, like mutual fund objective. So how it actually work? Whenever you buy a mutual fund, you get in return the unit, and the unit has an NAV, net asset value we call it, and as the NAV increases, your investment value get increases. Yeah, and then I would say the one of the biggest advantage you have in by the mutual fund is you get instant diversification without need of large amount of capital. Even with the 500 of money, your money can be spread across a 40 to 80 different companies. And another thing is I would say is the unlike a fixed deposit, the mutual fund, especially the equity funds, have a historical delivery return that beat the inflation over the long run. Now, not all funds are the same here. Let me break down the main type of so you can figure out where you fit in here. So if it for to first talk about the equity funds, so here it has a higher risk but has a potential of higher return. Typically suits for the horizon of 5 year or more. If you think of to invest in the equity mutual fund, then go for the large cap, mid cap, small cap, and flexi cap. The second is a debt fund where the mutual fund manager is going to invest in bond and the government securities, which has a much lower risk and has a stable return. If you have a short term goal, or if you want your money to park as emergency fund, then go for this kind of funds. And the third one is hybrid fund, a mix of equity and debt. If you are not sure how much return you are expecting, then go for the balanced return, where the risk is very low, um, and then you can return a decent amount of return here. And then come to the index fund here, the fourth one. So here this is simply tracking the Nifty 50 and Sensex. There's no active manager, so which means that it's going to lower your cost. And then uh, so how we going to track on this index fund is, suppose the Nifty goes up in 1 year by 12%, that your return is going to be increased by 12% here. So now coming to the ELS fund, is the it's kind of equity link schemes, saving scheme. So this give a tax deduction under section 80C, and which has a locking period of 3 years. It's quite popular among the taxpayers. So it provide you some deduction under deduction to save the taxes. So yeah, and so in my suggestion for the beginner would be start with a large cap index fund and the flexi cap funds. As the market is down from its peak, so it's a good time to invest. You can go for it. Right. Let's go to the part the most videos skip. How you actually start. how you actually start. The step one is choose the platform. There you have a two option whether you go for the AMC website like directly from the mutual fund or through the third party app Grow Zerodha or Paytm Money. So once you decided with the platform you wanted to use it, then move to the second step, that is to complete your KYC. It's normally done before you open your account in the bank. So the same process apply here too. So it required a pen and Aadhaar card, and it normally take less than 10 minutes and is a one time process. And then the third one is pick your funds. So here I've told you about earlier that this is the best time to invest in the Nifty 50, or you can use a flexi cap here. So I think the best time to start your journey with these kind of funds. And then the fourth one is that is SIP or the lump sum. Here is the systematic investment plan where the fixed amount of money you put in every month. And here the problem going to solve is the timing the market, because you have seen the sometimes the market are high and sometimes the markets are low. So it's the best time to the best way to time the market. You going to invest in the lower phase also and going to happen in the higher phase also. And the lump sum is something is that makes sense when suppose this time is the market is trading at low. So it makes sense to invest the lump sum amount. And the fifth is set it all and now let us grow, let the funds grow. And so the last thing would be you need to review your investment every 6 months, and don't be panic if some sudden fall there. So yeah, and let's the compounding work for this funds. Before I wrap up, here are the five mistakes I see the beginners make, and I'm going to tell you to avoid this all. First one is chasing the last year top performance. A fund that returned 60% last year might crash 30% this year. The past return do not guarantee a future performance. Always look for 5 or 10 year consistency or consistent return. uh, and the second one is investing in too many funds. Having 15 funds does not mean that you more diversified. You probably just have a overlap and more complexity. So there is always 3 to 4 good fund is the more than enough. And the third point is stop SIPing when the market falls, like right now. So this is the worst thing that you can do when the market dips. Your SIP should buy more units and at the lower NAV. So the fourth one is ignoring the expense ratio, and this is something all of you need to focus on, because most of the mutual fund investors don't focus on this point. So a 2% expense ratio and the 0.2% expense ratio might seem small, but over the 20 year it can cost you a lakhs in a compounding. Always check this number before investing. And the fifth part is expecting a quick return. And mutual fund, especially the equity fund, are the long term game. And given that the last 5 to 10 years at least, and to show the real potential. That's your complete beginner guide to invest in the mutual fund. So today we learned about how to invest in mutual fund, what is mutual fund, and the process of investing in mutual fund. And the fourth one is invested and be patient, and let the compounding work for you. The biggest competitive advantage you have as an investor is the time. The earlier you start, the more compounding work is in your favor. So if you found this video helpful, leave a like. It generally help more people to find the content. And if you have any question, drop them in the comment section. I'm going to read it every single one. So please also do subscribe for my for more content, and drop your next topic in the comment. I would love to cover that all. Thank you.